Hi, this is Mike, and we're looking at Bitcoin. So I decided to make this update simply to illustrate a couple of things here. One is a head and shoulders pattern at the small degree, but also the wave count, the most important thing out of my analysis. Now, I did say, or have been saying for a long time now, long time being a few months basically, since March, since this whole move was happening, that we'd only see limited move up in this move. And since you can never predict exactly what the waves will do, I did have a suspicion that because A wave was the largest wave in this correction, that the rest of the moves would be small. So in this case, we had the pretty big wave A since the end of last year, and we had it end where I thought it ended, and then B wave was small. Now, why do I think that is the case? Now, the reason for that is because A wave completed here due to the C wave being a lot longer than the A wave, which was pretty minuscule compared to it. So for it to go any longer than that in this type of manner, it makes absolutely no sense whatsoever. So for this to be a correction for this move since wave B in brackets, I think that's probably not going to happen. We've also broken back to the downside below the long-term trend line, which I'll cover in a minute or two. And the whole structure looks like a head and shoulders pattern. Now, the B wave is a zigzag. The C wave obviously is a five-wave move. The D wave is a complete zigzag as well. So the B and the D patterns are basically the same kind of pattern. And then instead of having anything else, you had a five-wave move, which is consistent with an E wave. Okay, so we have seen a top, and I believe the same thing happened in Ethereum, except Ethereum during the same period of time was making only a wave E. Okay, so for those who aren't aware, I believe that both of these cryptos have topped. They have completed a correction, which means much more further downside from this point. Okay, so no more highs, nothing above the red line here, nothing above 30,000. Okay, now when I made that call, it bounced, but it came back down, and you'll notice that it never went above the red line. The red line is the line in the sand. If I am to be proven wrong, there are three things that need to happen. One, it needs to hold above the dashed line, which at the moment is finding as resistance. And then there's the rising trend line, which it's already fought against and it has not been able to hold above that either. And thirdly, the red line, right? So three things holding this back. Now, I understand that other people look at support and resistant areas, and that's fine, not a problem. Basically, we have this area back here from 2021 that it has acted as resistance, as well as potentially this area here from May 2022. So you could also argue that this is an inverted head and shoulders pattern here, except why does that even matter? Because we're good at looking at patterns, we're good at identifying things of interest that could benefit us. But you know what they also say? A failed head and shoulders, you can go, if it's inverted, it's extremely bearish. A failed head and shoulders, if it's a regular one, uh, you know, that can definitely mean that it's bullish. So it works both ways when it comes to patterns. So you could argue for and against each of these different points. But when it comes to the level of analysis that I do with the waves, you'll notice that I've come to a bit of a slowdown in producing new major updates. And if you're not aware, my testing for AriasWave, the methodology, ended in March. And there's a reason for that. The reason is because I've produced every kind of possible outcome that is allowable by AriasWave, and I've merely gone with the preferred method based on evidence, based on, you know, 8 years of back testing on the methodology, but also on the most popular, markets such as Bitcoin, right? And the Dow Jones. And, we've also got the currencies and the metals, okay, even interest rates. So for me, I have my mind set based on AriasWave, what the preferred counts are, and I'm sticking with them, right? My new course that I'm going to launch soon will basically use these as, the bedrock of my analysis, the teachings, the waves are going to be based upon examples which are going to come from the examples that are real examples in these markets, and they've been identified very specifically. So, you know, if things have been identified as true, they don't need explanation, unless you're a member, a student. So if you want to know more about the previous analysis, well, you're either going to have to go back through the analysis, understand it, or learn AriasWave. But apart from that, you're going to have to basically understand that I'm going based on that. So whatever I'm telling you on this channel is based on the past analysis, which holds true today and will be taught in the lessons. So we are in a wave that's about to go lower, wave C. We are in wave 2, which has ended. Wave 3 is underway. Well, wave 2 ended at the end of wave E. We have had confirmation according to the count. We need to basically go lower from here. Now, how is that going to happen? So what would be the count at this point now? At this stage, I can see that basically we are seeing a 1-2-1-2 pattern. I don't believe this is a zigzag. It looks like a zigzag, except have you ever looked at a 1-2-1-2 pattern? It looks like a zigzag. Right? I think that this is a 1-2-1-2 setup. I think that there is not much time left before this thing actually starts to fall really big time, right? It's just going to start falling. That's all. No big deal. It's not like it's never happened before. Now, am I going to bring anything new to this today? Like, am I just going to talk about what I've talked about in the past, or what? Okay. Why not? Okay. So if we go back to the beginning of, and I've probably mentioned this before at some point, but I'll just mention it again. Why not? Now, if you look at this pattern down here, you can see a wave 2. Okay. Wave 2. Why is that a wave 2 at $0.01? Right? Why did Bitcoin go to 0.01 in 2010? Bitcoin came out before 2010, but it went back to zero then. Why? It's a wave 2. Okay. Now, I'm not saying all wave 2s go back down to zero. This wave 2 up here didn't. Well, if we're talking about a wave 2 and a wave 3, that's different. If we're talking about a wave 2, well, we're about to see another one now. So if we're going to see a wave 2, how low could this go? Well, it could go very low. Okay. Now, it could go to zero. It could. It's done it before in wave 2. Why can't this wave 2 go to zero? After that, it will go way higher, right? I reckon it'll go way higher. So who is it going to wreck before it does go higher? That's probably the first question you should ask yourself. Now, will it go all the way down to zero before it goes higher? That's the question, right? Obviously. So previous wave 4 of wave 3 would be a good point here. $168, right? It's a fib number. Wouldn't be surprised if it done that either, right? If it does that either. So keep that in mind, that one, wave 2 corrections can retrace back to the previous wave 4, wave 3. That's one of my key levels for retracement, especially in an exponential market. Okay, don't try to use a fib on this. It won't work. It's ridiculous. it can go to zero too. In fact, a lot of things can go to zero. Okay, you just because you haven't seen it doesn't mean it can't happen. Okay, that's the second thing that you should understand. The third thing you should understand is that we are having a lot of external factors influence the market lately, which are not relating directly to crypto. Okay, it's not crypto specific, it's not personal. Don't take it personal. It's not just a crypto thing. Okay, and if you understand that crypto was born out of this idea that it's a hedge against bankers or, you know, the Fed, whatever, you still have to go back and understand that, hang on a minute, if crypto is a product of that, isn't the whole market just sentiment? Well, it is. The whole market is based on sentiment, whether it's, risk on, risk off. Okay, there is nothing really holding up this value. It's not backed by anything. And this is interesting because I had this conversation with AI recently in my blog on my website, is that a lot of people think that gold is a safe haven, right? And gold is all the value of gold is also dictated by human psychology. So there is no safe haven. There's no such thing. It's an illusion. Okay. There is no safe haven. If a large majority of the market participants suddenly decide to sell, then the value goes down. Okay. And last time I checked, it's mass psychology that dictates these prices. Okay. So unless there's some new thing dictating prices, uh, then they'll follow the trajectory they have always followed throughout history. Okay. So today is no different. The next year or 2 years will be no different. So that's my thinking. It's logic. It's not really based on hype. It's not really based on, data or your opinion or anything like that. It's based on actual real world mass psychology analysis, which is the fractal patterns that drive the markets, which is what AriasWave basically figured out. Okay, figured out. Go to the website, have a look at the timeline. It took a long time for me to figure it out and back test it. Right here, I am now talking through the lens of AriasWave, bringing you this update. Right now, you can do two things. One, you can choose to actually, you can do three. You could choose to follow it, you could choose to ignore it, or you can choose to troll it. But choosing to troll it is basically you choosing the other side of you taking the other side of the trade, basically. So I hope you're ready to do that, because that's essentially what you're doing, psychologically speaking, right? So choose your side, get on your side. I hope you have your reasons, and I hope they're good enough for when you experience losses, because that's the only thing that's going to hold you accountable is your own account, basically, right? So hopefully you found this video interesting and informative. Thank you for watching.